Hello and welcome to another daily market update by Market Intel. My name is Ben and today we want to take a look at a tech stock. It's called Adobe and the price has reached one of our trading areas. There's typically a great opportunity to take a look at the chart because while you get access to these updates on our website, it's always good to take a look at the charts live and discuss them a little bit. It's much more interactive and you can understand these much better. I can explain things. So I'd say let's take a look at the chart. Let's go. Okay, we are on our website, dailymarketupdate.com. Today we want to navigate to our tech stocks section. As you can see, we also cover other asset classes, and if you register on our website, you can get access to all of these updates for free. The link to the website is in the description. As I said, we want to take a look at the Adobe chart, and I will click now on the larger time frame, and you can see that the market in recent weeks underwent a strong correction actually in the last few months. For nearly a year, this correction from this swing high here early 2024 has been unfolding. It's been a three-wave move down. As you can see, the overall correction already started end of 2021, and it was an A wave, a B wave and a C wave in our alternative scenario, and that would be part of a larger degree wave 2 correction. But the blue scenario, in which we already topped in a B wave and we're now coming down in a C wave, as per this interpretation, is only assigned a 33% probability, which means that a break below $331 would confirm this further, because we are now in a trading area, in a trend reversal area. But as long as we're holding that, the preferred interpretation is actually that we rally from here. So we'll talk about that in a minute. But first of all, the alternative interpretation for directly lower prices has been assigned a 33% likelihood. A break below $331 would make this more likely, and it would become even more likely with a break below the red line at $275.16. But in the preferred interpretation that we assign a 67% likelihood, the market is likely moving up in a so-called WXY structure of the B wave. The idea here in this interpretation is that this B wave is still unfolding, and we could even rally to new highs above the wave 1 high that is marked there in green from 2021. So basically we're simply watching if the market can generate here enough upside momentum to rally in a Y wave, which might even turn into an overshooting B wave. So the idea is then in the preferred interpretation this correction is extending. Let's also take a look at the shorter time frame, and here you can see the structure in a little bit more detail. As I said, preferred interpretation is that an X wave bottomed. We might now be moving up in a Y wave. That in itself would be a corrective rally, ABC, and would be further confirmed with a break above $640. But this is here the key support zone, again defined between the 61.8 extension and 100% extension, and the market has tested now this 100% extension, a very important target based on the internal wave structure. But we only have a 3-wave move up from the April low, so we need to see a little bit more evidence, like a first upside impulse. Just not enough structure really here to really confirm that we are turning around. But this is obviously a trading area which could offer the opportunity to add positions, but make sure that you understand the risk of this. The idea is that the move up is only going to be a corrective rally, and also make sure that you set your stop loss, which based on this structure could, for example, sit 1 or 2% below the box, so below the $331.93 level, because below that level it becomes more and more probable that we take the direct pathway lower. This is only based on general best practice, based on the Elliott wave structures. What you do essentially is up to you, your portfolio and your risk tolerance, but definitely important to understand when the structure breaks, and that would be a break below the April low. So yeah, that's the update about Adobe. Hope you enjoyed the update. If you did, please hit the like button, leave a comment and subscribe. And if you're interested in additional updates, make sure that you register on our website, and you can do it completely for free. Also, let me know in the comments which other tech stocks or cryptos you want me to cover in future videos. Thank you very much. Bye-bye.